What's happening, gurus? Happy Tuesday. Thanks for tuning in to another one of these videos. For those of you that are watching and enjoying these videos, again, guys, if you are enjoying the content, please just help me to sort of get it out there into the YouTube algo. It's really hard to crack, obviously, and I'm keen to keep making these videos for you. And I will continue to make these videos regardless of how many people watch it. I do this stuff for the love. I don't do it for the money, in case you guys haven't noticed. So yeah, I mean, just if you guys are keen, please help me out by simply just liking and commenting and interacting with the video. It helps me a lot. Gives the video engagement, and then random other people pick it up along the way. So yeah, I would appreciate if you guys could help me with that whenever you get the chance, and if you guys are enjoying the content, of course. I know that it's a bear market, and to be honest, every crypto channel, whether it's me, Coin Bureau, or the Coin Desk, or Crypto Banter, or whoever, they all suffer in viewership and engagement and interest, which I'm cool with. But yeah, we obviously have quite a nucleus group, so if you guys could help me out, that would be fantastic. And yeah, moving into the charts, basically, before I get started, I just want to do a bit of a news recap. So quite a lot happened over the weekend. One of the most notable things, obviously, was this whole DeFi fallout situation. For those of you that don't know, and for those of you that aren't aware of what happened, basically, there's a South African guy called Cme, who is heralded, or was heralded, as the godfather of DeFi. And the reason being is because he was basically a super intelligent coder, super smart guy when it comes to DeFi protocols, and yeah, I mean, just a pioneer in the space. He was behind a lot of the famous DeFi exchanges that we know today. Yearn Finance, I think, being probably one of the most famous ones. Recently, Mr. Cronje was embroiled in a rather deep scandal with another guy called Daniel Sesta. I did cover this in that whole Time Wonderland scandal that came out last month, or I think it was the month before that. But yeah, so I think since then, I think Cronje was pretty much on a bit of a downward spiral. Basically, just to touch back on what happened, there were issues. The CFO that was part of the company was basically found out to be the old CFO of Quadriga, which was part of this massive scam. Long story short, these guys were caught with their pants down. Basically, what happened was, over the weekend, Andre Cronje, not even himself, Andre got his partner to basically make a tweet saying, listen, Andre's out the game. He's going to be closing down all of the DeFi protocols that he's helped invent. And that was, again, solidly exchange, Yearn Finance, etc., etc., etc. Most notably, the one token and the one ecosystem that did really suffer the most was the Phantom ecosystem, because these guys were using Phantom to sort of enact a lot of their protocols around staking and yield farming as well, through spooky swaps, etc. So yeah, I mean, basically, a lot of the guys that were following him, a lot of guys that were using these DeFi protocols, were using Phantom, and as a result, a lot of them being pulled out, a lot of the exchanges being closed and shut down, forced a lot of people to obviously sell off, which caused a massive sell-off in FTM. The good news about that, though, is that FTM pretty much held its own. I mean, it kind of survived. It's still pretty wrecked, but yeah, I mean, I really, when this whole thing happened, I thought Phantom's going to sub $1, and it's probably going to stay there and struggle to get back. So I'm really happy to see that it didn't. I think it's more of a show of faith into the power of Phantom. I'm a huge Phantom believer. But we'll get into that a little bit later. I also want to chat about the ZK rollups and what they are exactly, and why I think we should be getting into those. So it might be a bit of a lengthy video today, guys. But yeah, I mean, for those that are enjoying these, I really enjoy making them. So I hope you do enjoy. Cool. So that's pretty much the Andre Cronje news that I wanted to cover. The other news I want to cover is obviously this movement in America, obviously, with what's going on. So last night, basically, Biden came out and said that he's going to sign an immediate executive order on the US's stance around digital currencies. That's what really sent the price pretty much tumbling last night off the back of a very nice bullish move. Again, interestingly enough, I did mention it in the channel. The chart was showing the bearish move long before the news came out, which is quite interesting. I really think it was another sort of testament to the genius of technical analysis and how important technical analysis is in such a time. So I really think it's important for those of you that are interested in furthering your crypto knowledge to get a little bit more in depth in the charts with me, and pay a bit more attention on sort of the technical analysis aspects. I am going to be releasing by the end of this month the Guru Academy, which is going to be basically a place where if you're unsure of your knowledge, or you want to sort of brush up on your TA skills, you want to learn more about technical analysis, you're going to be able to go in there and basically learn everything off of sort of a Bible, if you will, and that's it. You guys can use that as the gospel, and it'll have everything that you need to sort of expand your TA knowledge. So again, Biden's news, it's all big. It's all, to be honest, it's all a big show. I'll be honest with you guys. I'll be straight. This is market manipulation at the highest order. We've basically been in a 2-year cycle of extreme market manipulation. I think that the pandemic set off a gateway for the world's elite to basically have access to make these to a network that allows them to make these changes on a mass global scale, and it actually affects the global markets every single time. So whether it's a war in Russia that's actually predicated by the US's concerns around the petrodollar economy, or it's a pandemic backed big pharma move, or it's simply the Fed freaking everyone out so that they can look like the heroes when they don't hike the rates, next week or whenever the meeting is going to be. There's a lot of manipulation going on, and I think it's just important to sort of step back and not get too swept up in the bad news, not get too swept up in the fear and the panic, because let me tell you now, these guys run on fear and panic, and they understand the power of fear and panic in our in our reality, really. And what they're basically doing is they create the fear and panic, the panic sells, they buy the panic, and then they send us. And that's what's happened every single time in history. The history of the stock market, if you go and look, it's one direction, it's only going up. But all of these dips, when you're too focused and too hyper zoomed in, look like the end of the world. But when you zoom out, I'll actually show you guys. Let's have a look at the chart here. I want to show you guys what I'm actually talking about over here, because the charts can really demonstrate this nicely. So let's do like so. Let me just move this out. I'm going to turn this into a monthly chart, and I want you guys to just have a look at this. Okay. This is one direction. I don't know why it's only going back to 2015, like the stock market started there. Although I think TradingView probably was launched around then. But if you had to go and look, this is a really good indication as to what I'm talking about here. You can see that the general direction here is up. There's no two ways about it, right? But if you are hyper zoomed in and you are hyper focused on just the COVID crash, you would have seen absolute doom and gloom. You would have thought this was the end of the world, and that you better sell all your stock, sell the wife, sell the house, sell everything, because it's all game over. You know what I mean? If you had to zoom in here, let's just look at it on a weekly thing in sort of the same space. You'd think this is the absolute end. If you saw it like that, let's just say like that, you saw it like that, you'd think, oh, we're going to all-time lows. This is the end of the stock market. We're going into a global economic recession or whatever have you. And then you zoom out and you look at this thing, and they just absolutely sent us once that thing was over. And that goes to show you that these guys create panic only to buy it all up again. So that being said, I think I've covered most of the important news that's going on. The next thing I want to do is I want to quickly just hop into the chart and look at what's going on. So guys, I'm here looking at Bitcoin versus the dollar, with the bull market support band indicator on. And obviously it's not a great picture to be looking at here. We've had 3 pure rejections off of the band. It's not good. I actually went back and sort of backdated the movement in the chart in previous years, and we haven't really ever seen that. So we're definitely in sort of unprecedented grounds here. Sorry that I'm zooming in like this. I just want to show you guys sort of, where this has happened before. The last time we got 3 straight monthly, pure monthly rejections. And again, for those that don't know what I'm talking about when I say rejection, I'm talking about it coming up to the line here and just being absolutely destroyed from there, or at least not being destroyed, but being sent back where it came from. So you can see here, we had one test, almost made it above. Let me just zoom in for everyone for those that can't see, or let's do like so. I'm actually going to make this bigger. Let's take it like that. So you guys can see over here, it hits, goes down, hits, goes down, hits, goes down, comes back above, comes back down again. Now I promise you right now, most traders that were using SMAs and EMAs to moving averages, let's say, to trade the charts, they would have thought that this was the beginning of a massive bull run, and how sorely mistaken they would have been, right? But look at this again. They drop it only to bring it back up again and rage. Now, I'm going to quickly just show you what happened off the back of the end of those tests. Take a look at this. Let me just quickly move it like so. There we go. Just look at that. It preceded the biggest bull run in any charts anywhere in the world, across all economies and across all asset classes. So I think it's testament to the bull market support band. I think it's testament to this band and moving averages as well, for us to simply just understand, what we're dealing with and where we're at. Again, we've got this thing where it comes down below the bull market support band, comes here, comes back above again. Look at this, a wick all the way down before coming up and going. And again, this was COVID. And it's interesting to see that that previous wick had nothing to do with any pandemic or anything of the sort, and yet it produced the exact same pattern, only to come above it and proceed a massive, massive bull run. So my opinion is the following. I'll show you guys what I'm thinking. I'll show you guys what I'm seeing. It's not great, but unfortunately, it's just the way that I think it could go, and just based on what I've seen in terms of the way that they manipulate the markets, we could possibly see an attempt to clear the band. It could come back up here, test, maybe make a bullish attempt before absolutely ripping down, possibly to 28k, and then carrying on into a bull run. So again, it does support my thesis of a blow off top potentially this year. Maybe not a blow off top, but we could be headed for a gigapump. I know it sounds strange to say that. I know it doesn't sound or look bullish at all at the moment, but it's very possible, and it's a possibility. And one thing I've noticed is that the market, like Roll Paul said, always takes the path of most pain. I mean, there's no two ways about it. Look at December. People were convinced we were going to see 100k Bitcoin, and it got absolutely wasted. I mean, this would have been off the back of Pumptober. People would have said, yeah, we're going for the 100k. And then, this is wreckage. This is wrecked city right there. So I think it's just important to understand that the market does whatever the opposite of whatever the world thinks. And when I say the world, I mean most of the retail traders, I mean most of the crypto influencers, I mean most of the people in the world, except for the elite that have access to the inside information, and those, of course, manipulating the market, otherwise known as market makers. So I think it's important to notice that. I think it's important to be aware of that, and obviously be cognizant of that moving forward. Cool. So now that we've covered that, I just want to show you guys the weekly charts as well. The weekly is looking quite interesting, to be honest. I mean, looks like it's trying to really put in some form of like a wedge here, a wedge pattern. I'm not too sure yet. It's too early to call any sort of patterns. It could even be a megaphone type pattern as well, but I'm not too sure. I'm not going to call anything before it starts becoming a bit more obvious. I mean, you guys can see that this was a clear, head and shoulders pattern that came and sent us down. Now that that's over, I would be wanting to see the reverse in that. I would want to see, a shoulder, maybe a head all the way down here, which again supports my thesis that we could come to test 28. I mean, can you imagine what that would do to the market sentiment? It would absolutely rip into retail. It would be total capitulation. And then, I honestly believe that they would just pick it up from there. It's not about where people buying anymore. It's about where they want to turn the market. It's got nothing to do with people wanting to buy or where they want to buy. Now, on that note, I just want to show you guys one other thing. This is obviously the Cme Gap. We've spoken about the Cme ad nauseum. For those that don't know what I'm talking about, please do yourself a favor and research Cme in the channel, not in the chat, in the channel. If you search Cme, if you just scroll all the way up, in fact, if you search Chicago Mercantile Exchange, you'll see it there. I've done many a write-up on what it is and what the gaps are. Long story short, gaps are created by the closing price on Friday and the opening price on Monday being two different things, which generally happens through a weekend pump. Due to retail. So now I just want to note that we have a massive gap over here, and the gap is between 24,700 and 26. Guys, these gaps get filled. Hey, that's one thing I can tell you now. The gaps absolutely get filled. This is the most recent gap. You can see how it's, and they fill it with wicks. They don't come back down and chill and then move around those areas. They wick down. It quickly fills it up, and it's the Cme that wicks it. It's the traders at the Cme that come down and they create enough liquidity to basically drop a wick. It closes the gap. They have to close the gap. They can't have gaps open in their trading institution because it would just create massive issues in their books, etc. So you can see there aren't any other gaps, but I mean, this is a glaring and massive gap. I'm concerned. I honestly think that, we could see them come down here, and I'm sorry to be painting a bearish picture, but I don't want to use emotion. I don't want to, be this permabull all the time and get locked into false longs and lose my money. So, and the same for you guys, that's kind of what I care about. So, it could be that they come down here, create some false, long squeezes, some false bull traps, and then just give one wick, just one little quick wick. It'll be, it'll be on a 4-hour candle, if not a 1-hour candle, to be honest. Absolutely quick wick, get us down to 24, have the whole world screaming the death of Bitcoin, 10K, 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 before going absolutely wild. That is one scenario. Another scenario is that they do that, and it absolutely lays waste to the entire cryptocurrency ecosystem. Too many people lose too much money. All of the retail uncles and dads and grannies and mothers that invested in Bitcoin see this. They see their portfolio down 70%. They've lost more than half their money, and they capitulate. They sell at the bottom, and that could actually take us down to the 10K region. So I'm not going to get into where the lower supports are. I will do another video on that if we ever get there. I hope we don't again. I'm not sort of living in a fantasy world, but at the same time, I don't want to see that at all. So let's see what happens. I just want to make you guys aware of potential outcomes. Cool. So that's looking at that. Let's have a look at the stock market. I just want to quickly show you guys what we're looking at the moment with the reason for why we're seeing even more bearishness as well. This is obviously coming off the back of the stock market. Guys, the current situation with Russia, the current situation with the oil prices are deeply concerning. They are affecting the global markets, especially in the commodities sector as well. So I think it's important to understand that this is what's happening, that this is what's going on. There is market manipulation. I don't feel like they're trying to ruin the world. I don't feel like they're trying to ruin the economy. The one thing I can say, though, the one thing I can vouch for is that, and I said this last night in the chat, if you had something that you really cared about that put bread on your table and you knew that it was going away, you would do everything in your power to keep it alive. And that's what they're doing with the print. And I can tell you now that they're going to print more. I can almost guarantee you that they are going to print more money in this quarter. It's going to create a false pump in the market. It could even lead to the giga pump I'm talking about, but that would honestly and ultimately result in a blow off top. So I'm not going to keep blabbing on about all this stuff. I just want to show you guys all of the stock market. This is purely why. I mean, this is the NASDAQ. It's getting wrecked. It's wreck city on the NASDAQ. And you can see these are really low points of support for the NASDAQ. So, I mean, we're coming down to some really dangerous areas here. But I just don't feel like this is the end. It just doesn't feel like doom and gloom to me, both not on the charts and also in fundamentals. I think we were being sort of manipulated emotionally so that people can actually just capitulate. And that's what I think is really happening here. Again, with the tether dominance, you can see that people are obviously pulling their money out. This is what I think. I think that it's going to come up to fever pitch over here where people are going to sell out. They're going to announce that they're not hiking. And then bang, it's going to come all the way down, and we're going to see a really awesome pump in across the board, across the stocks, across crypto, across most asset classes as well. So that's pretty much what's happening in the charts today, guys. I'll quickly open up I just want to quickly just dive into the intraday chart here. I'll look at the 4 hourly as well, some 4 hourly candles. So as you guys can see, I mean, what's funny is that I've had this triangle up, I think since last year. I'm not even joking. I think I've had this up since, I mean, I put this in, I think, around here. Once we develop that sort of range here and this triangle here, I'm now seeing it floating around crypto Twitter, which means that it's happening and other people are seeing it as well. This is a bullish formation. So I do think that this is, sort of out is the general, out is going to be basically the general direction out of here. If we look at, I quickly want to just show you guys one more thing. Just want to have a look at some of these indicators as well. For those of you that are not comfortable with what these indicators are, you guys can obviously just research in the group. I have discussed it many, many times. I will do more about what RSI is and then what the other indicators are. But this is basically, these are just momentum indicators. So you can see it's on its way down now. It's seeking the lows, and it's going to probably make its way up again, going to give us a bit of an intraday pump to the top of this line. Whether we see it today, whether we don't see it today, I'm not too sure. I've laid out two sort of scenarios for you guys here. In the RSI, I just want to show you guys here, it's also forming a little bit of you can't really see it so nicely, but it's forming a bit of a triangle, which is, I'm not too sure exactly which way that's going to break, because as we've seen before, sometimes you get RSI breakouts where you think it's going to come down and then it just continues to pump upwards. We should get an intraday bullish move up to the top here before continuing down. I'm not going to rule anything out. I'm not going to negate anything or say that it's not happening or is happening, but that's pretty much where I see it. I see it at the moment. I think even in the MACD as well. I don't really use this indicator in hourly charts, but just have a look here. We're getting a nice little bullish crossover there. So that's what's leading me to believe that we should see some intraday bullishness. But again, guys, I'm not here to predict anything. I don't have a crystal ball. If I did, let me tell you, I would not be worried about a YouTube channel. I'd make us all rich and we'd all have Lambos in the Maldives. But basically, that's pretty much where I'm seeing it happening. These are the overalls. This is sort of like a macro outlook. For those of you that are unsure and for those of you that still want to know more, I'm always in the channel, so feel free to always hit me up. Otherwise, I'll be looking for some trades today in the alts. I mean, we're getting some really interesting alt action. As you can see, it's pretty green in the alts, but there isn't too much movement. I mean, there's a few that are pumping your Z caches. RSI is also looking pretty nicely. Again, the thing about these is that they'll have fundamental pumps now. So ZEC is a privacy token from, privacy token. If I'm not mistaken, I think it's a Chinese token as well, like Lit Entry is too. And you can see that they do really, really nicely in these times, especially in times where people are looking to hide their cash, to hide transactions, aka Russia, aka oligarchs. And that's it. I mean, seeing Link at 13 just breaks my heart. But it is what it is, guys. I mean, the people that are buying these levels, provided we don't sink to 10K, the people that are buying these levels are going to make life-changing wealth. I mean, imagine buying Link at $13 and it goes to $100 in the bull run. Or in this next bullish move or this next blow off top or whatever you want to call it, So that's pretty much what we're looking at now. My absolute favorite token. I'll quickly end the video with this one. One thing I want to quickly talk about is something called ZK rollups. And what ZK rollups are is there's very few ZK rollups. The most famous one is Polygon. The other one is Immutable. Basically, what these things do is just so we can understand, look at that fundamental pump. That's the news of them getting funding. And it's having a nice solid little pump there. But basically what ZK talks about, what layer 1 and layer 2 talks about, I'm sure you guys have heard of L1 and L2 in Ethereum. Long story short, Ethereum is extremely expensive to use purely based on the fact that it's a very congested network. And in order to use a congested network, you need to pay the gas fees to get right up there. And that is why gas is so expensive on the Ethereum network. So instead of processing one transaction at a time, these companies go and they use the Ethereum blockchain to build another layer, aka layer 2 above the Ethereum blockchain. And then instead of processing one transaction at a time, being very expensive, being a little bit slower, what these guys do is they roll up a lot of transactions, hence ZK rollups. I'll get into the ZK part of that in a sec. But what they do is they roll up a lot of transactions. And then once they've got a bunch of transactions, they send those transactions off into L1. They confirm all of the transactions on the Ethereum L1 layer. And then they obviously disperse the transactions out to their own blockchains and confirm, etc., etc. This makes it a lot cheaper. It makes it a lot quicker. For example, Matic, I think, can handle 120,000 transactions a minute. I'm not too sure exactly, whereas I think Ethereum is doing something like 10K or 20K. I'm not sure of the numbers, but it's astronomical compared to Ethereum. Immutable is another version of that. These are the future. So I think that it's important to start looking at getting into Matic if you aren't already. It's important to look at IMX Immutable if you aren't already. Immutable could potentially be the next big thing in the NFT ecosystem as well. So keep an eye out. ZK, by the way, stands for zero knowledge. And the reason why is because until L2 sends the information to L1, L1 has zero knowledge of what L2 is doing. And that's why it's called ZK. Cool. So get into those. For those of you that still have questions, please hit me up in the channel. I will see you guys all there. Have a good one, gurus.